Hello everyone, welcome to your own YouTube channel, Investment Wala. And many people had doubts that the trades that we are posting on our Telegram group, they are not able to understand what exactly they mean. So we simply post the orders to be placed next day for Back Nifty option selling, commodities, and equity. In this particular video, we'll be discussing about the Bank Nifty option selling system that we have been following, how to get the idea as to what are the orders that are there, and how to place them, and how to interpret the data sheet that we have provided to all the subscribers. So before we begin, this is our Telegram channel. This is for basically for discussion among all the fellow traders. Recently we made this group open for all, and anyone can share their views, ask their doubts, and whatever they feel like about trading, investing. And this is our channel. Here we post our trades on a daily basis, and as well as uh, we post some updates and education related to stock markets. So let us begin on how to read our data sheet that we have provided to all, and the trades that we post here. So as you can see that this is the trading plan sheet for Bank Nifty option selling. And whatever red cells you see, we have to enter these red cells daily. We have to enter the data here daily, right? And on the basis of that, this the formulas are set, and we get the orders for the next trading day. So let us say that today is 3rd July, and the next trading day for us would be 5th July, that is Monday. So let us enter here 5th July 2021, right? So also here we need to enter our on position. So whatever trades we have already taken and we have carried them overnight, we have to enter over here. So for now, we have a CE sell position on. So we have on position in as 34,800 on the contract, which is 8th July 2021, right? And over here we need to enter what is our entry. So our order got triggered at 360 rupees, right? So over here, this will calculate all the necessary orders that we need to place for the next trading day. But now we need to plug in all the relevant data points over here as well. So as you can see here, it's written that import data in cell B2 only. We need to upload the relevant data points that are there. So we have these two links over here. As you can see, this is NSE Bhav copy options data and the spot data for Bank Nifty. So we'll first download the spot data, right? So we are redirected to NSE website. We just select daily snapshots, then select the relevant date. So the date would be July 2nd for us now, because the next trading day is 5th July and the previous trading day was 2nd July, right? So we just download this. This is day one data for us, right? Because the previous trading day is considered as day one. And we also download 1st July data, and this would be day two data, that is previous to previous. So we save it as day two data, right? So now we'll just upload this data in our sheet in day one spot data, which has to be imported in cell B2 only for the formulas that are there. So we import the relevant data, just select it from our device. This is day one data. So we'll upload this. Also, we need to import day two spot data also, right? So we'll import in cell B2, import it from our system. And the spot data is successfully loaded now. Now we also want previous 2-day FNO data. So we have given this link options data over here, and which will redirect you to the NSE website. Just select Bhav copy, and select the relevant date, which is 2nd July, and download it to your system, right? Then 1st July, get data, download to your system, right? So now we'll import the same data over here as well. File, import. So this would be day one data for us in FNO, and we upload the same, right? So this is day two data for us. We'll import again day two FNO data from our system. So now all the relevant data points have been uploaded, right? And the Google Sheet will calculate the relevant orders to be placed the next trading day now. So as you can see that this box is there, and you have to place the orders what this box suggests. So we have two columns over here, right? One is the contract and the other is the orders to be placed, right? So we have 8 July contract since the next week expiry is 8 July. So we are trading in weekly expiries and the orders to be placed, right? So I think Google Sheet is still calculating the orders. Yeah, so all the orders are now calculated. So now let us study this in detail. So the contract is for 8 July and the orders to be placed are this, right? So first we should know that what is the open position for us. So as we discussed that the open position is 34,000, 34,800 call sell, which we entered at 360. So now the data suggests that we should place an SL at 500.05, right? The target for that is suggested as 90. So the target remains the same once you enter the trade, and the SL keeps on trailing basis the daily data, right? So we have this position. We'll place two orders for this, which is one is the stop loss and the other is the target. So since we already have a call sell entry, so uh, we won't be punching any orders for a call sell again. This will only come when we have exited this particular position either through an SL or a target, right? Also, since we do not have any put sell positions, so we don't have to place any put sell stop loss, right? Similarly, no put sell target as well. But we do not have any put sell position, so we need to place an entry for that. So we'll be placing a 35,200 put sell entry at 393.9, which our system suggests, right? So we placed all these orders at 9:25 a.m. if there isn't a gap up or a gap down scenario. If there's a gap up or a gap down scenario, and there can be three scenarios that either your SL is missed, your target is missed, or your entry for any particular strike is missed. So in case your target is missed, then there's no need to worry because you are getting more profits. So let's assume that this particular strike opens at 70 only, then simply exit at current market price at 915 itself and don't even wait for 925, because you are getting more than what you intended to make from this particular trade, right? And in case your SL is missed, then SL missed means that the high made at 9:25 a.m. is higher than your stop loss. So in that case, we'll wait for 5 more minutes and place the order basis the day highs, uh, basis the day high price of that particular option strike, right? And we'll update that particular thing in the Telegram as soon as we punch in our own orders, right? Then if there is an entry miss, in that case also we have an entry miss means that the low made for that particular option strike is less than what the entry price is, low at 9:25 a.m. And even in that case, we'll wait for 5 more minutes and calculate a new entry basis the new strike price that is there, right? So this is how the orders are to be placed every day in the morning for Bank Nifty option selling. So those who have a sizable amount of capital can start trading this with the system, and we suggest that you start trading it with only if you have at least 2.5 to 3 lakhs in your account, and trade with one lot, because we don't believe that you should risk more than 2 to 3% of your capital on a single trade, and the risk in this particular trade comes out to be 6 to 7,000 per trade. uh, if your SL hits, and that should not be more than 2 to 3% of your capital if you are risking. So we also suggest that you maintain your risk management properly, because be it trading with 2.5 lakhs, 25 lakhs, or a 2.5 crores, uh, you have to manage your risk properly. If you are not able to make money with 2.5 lakhs, there is a high chance that you won't be able to make money with 2.5 crores as well. And you have to stick to your system and money management properly. Only then you'll be able to make money, because trading is a game of probabilities. And uh, if you don't adhere to your risk management, then the market will soon throw you out of the markets, right? So if anyone wants to see our trade history, so we have started updating this trade history from 23rd April this year, and we have made around 10,000 per lot, which is approximately 4% on the margin that we have been using. So there was some choppiness in the month of May, and we have a series of stop losses, but this is also a part of the game. But we still believe that trend following is the best way to trade, as uh, this is the most calm method to trade with. And also we believe that wealth is made in the trend following systems only, because whenever there's a big move, you'll always be on the right side, right? So yeah, thank you so much, thank you for watching this video, and join our army, and be a part of the few percentage successful traders in the country, and keep following us. Subscribe to our Telegram channel, the link is provided in the description, and also like, share and subscribe our video and the YouTube channel. Thank you so much.